Welcome to TMS Insights for the February edition. It's midway through reporting season. Ben Clark and Jeremy Hook bring you a lot of news because we've had a lot of companies give half-year updates and full-year results. Ben, it's been busy on all these conference calls we've been on.
Absolutely. And we're still yet to get into the proper thick of it.
Yeah,
but,
and there's a lot to talk about, so
Yep.
we'll get right into it. Let's talk about some of the results. One of the first out this season, isn't it funny how the best ones come out early sometimes? REA Group, good numbers.
Yeah, they've reverted back to their historical trend, which is about 20% revenue growth, 30% profit growth. Great outlook. Still looks like a good stock to have.
Yep, still one of the highest returns on equity in the top end of the market. So that one's still one we like. The banks have been rotten of late, really, haven't they?
Yeah,
But let's face it, when we heard the CommBank half-year result last week, it was good. It was well presented. Earnings were only up 1%, the dividend maintained. But if you like a company which has got a dominant market position, strong dividend, Ian Narev gave a good account of the business.
I think so, and it was exactly what the market needed at that time because we were having a lot of concern more globally about the state of banks, and CBA delivered a result which was typically unexciting in that there were no issues. But I've got to say, I thought Ian Narev was probably the most optimistic on the local economy we've seen him for a couple of years. Sort of saying that making this transition pretty well from resources to other areas of the economy. And, I think the banks, to me, come back to pretty good value again now. Not a lot of earnings growth, you'd have to say, and probably will be the case for the short to medium term, but still great dividends.
And although the other banks don't report full half-year profits at this stage, we get quarterly updates. Last week we got NAB's quarterly update, and we got ANZ's today. They weren't too bad.
No, they weren't.
ANZ was right. Yeah.
And NAB's was pretty good, I thought. And they might even be able to hold their dividend after spinning off Clydesdale, which would be a bit of a surprise, I reckon. Macquarie was the other one, which I thought, that typically Macquarie are pretty, hold back on their updates and then they deliver well. They still guided for a better year in the year ahead. But I guess, with these big global movements in investment banks, they got caught up in that. But, I think, there's been an overreaction there in the share price.
Yeah, look, I mean, their earnings have had a good ramp up. They're consolidating now in the earnings side of things. But more or less, I think you're right, Ben. They've been caught up with what's been going on in Europe and America with investment banks. Deutsche Bank, we know, has been under pressure, most of which is probably contrived, and though credit markets did slow up a little bit in January, it's massively been overblown in the share price. So Macquarie looks good.
Yeah, it looks cheap, that's for sure.
Good. Yeah. CSL, that's been a great stock and another good result without stunning earnings growth, just giving a good account of where they are midway through a long-term growth story.
Yeah, absolutely. This is still the bellwether of the market for mine. And, this is going to be a year of more investment for the company. They've got a couple of big drug launches hitting in 2016-17. They seem very excited about that year.
Yep.
So I think this is more a year of consolidation before hopefully a lift next year. And I think at some stage the market will start to look forward again and share price will start to go again. But very solid result in the meantime.
Yeah, again, one of those really top return on equity companies in the market.
Amazing,
so right up there. Invacare, the funeral services and crematory operator, which always brings a bit of a laughter when we mention it. Result was good, solid. I guess the main story they brought to us was how their US expansion had gone, and surprise, surprise, a little bit more costly than they first thought, but the rest of the business is going really well.
Yeah, I managed to maintain market share. Case volumes lifted more than expected, and it's a business which I think when you look at the 20-year outlook, growth is almost inevitable. Management would have to really sort of stuff it up, I reckon, for not to continue to do well.
There's a positive demographic factor there, so
absolutely,
they're well positioned for the baby boomers. And we heard from car sales a week ago. That was really a good result overall, and it's a stock that's been relatively strong in this market.
Yeah, it certainly has. It's one of those ones that does look more expensive, but despite that, they're just delivering on that consistent earnings growth, another very high return on equity generator. And I guess the future for them will more be driven by these offshore investments that they've made and how successfully they can execute on those and bring them into the overall mix. But slowly and steadily, it seems to be doing a great job.
They're doing well. I reckon one of the more interesting results and share price performances, and it's pretty hot now because it only came out this morning, was primary health.
Yeah.
It says a bit about the market overall. So primary came out with a profit warning in November, and then the mid-year economic update from the government was quite disastrous in cutting bulk billing, pathology and radiology. So they were sold down to about 220 prior to today's result. But Ben, they're up about 25%.
Yeah. And I think this is one thing you get from clients is they sort of say, oh, that must have been a terrible result and that must have been a great result. And one thing I would caution on is that the share price reactions at the moment probably more reflect big, short-term bets that are being taken by institutions and fund managers, etc. The market seems to be getting ever increasingly short-term. And you'd actually have, looking at prime result, you'd have to say it wasn't that flash.
It was okay.
It was okay. Yeah. It probably was more an expectation. It could have been a lot worse than it was. And we've seen a lot of other companies who actually we've looked at the result and thought that was outstanding and haven't really done much because maybe the market was hoping for even better than outstanding. So expectations play a very big part in in these, and you really got to continue to look at the long-term story behind owning a company rather than worrying about its every 6 months sort of numbers. But they are a good insight into what's happening.
Yeah, they are, and I think more of what's happened reinforces that for us is that there's been a lot of share price action in the market this year. Obviously, a lot of it's been down. In a basically healthy economy, Australia's going quite well, and so are most of the major global economies. I mean, look at the employment numbers in the US, for example. No doubt that there's a robust economy at the moment. But right now, the volatility in financial markets takes you away from the ability to perceive through price alone what companies are really worth.
Yeah.
And so it's really important because we'll be talking to you about this, just focusing on what we're trying to do over the longer term, the objectives we're trying to fulfill rather than trying to meet the short-term needs of share price action around what are marginal buyers and sellers.
Definitely. And I think another thing we definitely noticed is that liquidity in the market seems to have dried up.
Yes.
And it doesn't take a big buyer or a big seller to really fluctuate a stock share price. And that can be something that can last in the short term. But over time, the market will price a business pretty efficiently. Yeah. I'd agree with you on one area that's really done well has been the retailers.
Yes.
And they're normally, they're generally pretty average businesses to invest in, but they are a good insight into how an economy's going because they feel when the economy's going pretty well, the retailers are doing well, and when the economy's not going, vice versa. And I think
the Reject Shop today.
Reject Shop.
JB Hi-Fi has done very well.
Nick Scali,
yeah.
Harvey Norman, Baby Bunting,
Baby
Green
Bunting.
Cross, all reported really quite strong results and all saying some quite optimistic things. So, that's the sort of evidence that you look for, that things aren't maybe as bad as the media's portraying at the moment.
Green Cross's numbers were out yesterday and they were a solid set of numbers.
Yeah.
The takeover interest from TPG and other parties still there.
Yep.
So they've rallied well, 720.
Absolutely. Yeah, look, and I think that there's been a few others there, which I think by and large, the market's reactions to results, you'd have to say is that there's been a bit of surprise that they've been better than expected. I think that generally across the market, things seem to be stronger than we thought they'd be. Just
quickly, because we want to wind up, Challenger was a good set of numbers.
Yeah.
And they were sold down before the results, so they've bounced up. Aveo, the retirement homes, we've talked about that. They performed well with their result today. Any others that you mentioned?
Well, look, I'd certainly say we did a video in the August reporting season. They were 2 of 3 companies that we thought really stood out in terms of the CEOs on the earnings calls that we listened to, banging the desk and saying we've got what we think is a really good outlook. And both of those companies have again delivered great results. So we're certainly getting more interested in those 2 businesses, I think it'd be fair to say, because both share prices are actually probably pretty similar to where they were 6 months ago.
Pretty much, yeah. And that's the benefit of the weakness if you can take advantage of it. So
definitely.
Well, that's all we've got time for. There's been a busy time and more ahead. So reports thick and fast over the next couple of weeks, and we'll be updating you later in February of all of that news.